that's why paying just a little bit more to use premium tools and brokers, they will actually end up making you more money. I use Centerpoint Securities as my premium trading broker to trade these volatile stocks like meme stocks. Without them, my 5-figure profits wouldn't have been possible. So knowing important live market data points such as market cap, float, gap percentage, institutional ownership, insider ownership, they definitely help me decide on which stocks I should focus on as the main stocks to watch and where the opportunities to profit are. In total, my trades on these meme stocks were decent. They helped me lock in a 5-figure green day. But of course, I still want to share with you a losing trade on the same day that I took on KOSS, which is the sympathy play of the meme stock hype. I believe there's always valuable lessons and insights for beginners to learn from, especially in the losing trades. Because that's how you learn to cut your losses quick and keep your winners run longer. Okay, so looking at costs here, this is the big gap up day that you saw for GameStop and AMC. And like, just look at the intraday chart on the 5-minute, like what a mess. You can see the stock tested the $7 mark, slammed back down to 560s, reclaimed to 680s, once again double top, slammed back down and repeated the same action. Again, really, it was range bound until 12:30 when it sold off. So I was on the short side, and yeah, if you just really quickly look at the stats, the float is quite low, like 5.2. Market cap is a very small market cap, but the inside ownership made me think that there would be some more selling pressure, just like AMC with the dilution and all that. And the IO, I thought it was preferable. It was good in favor of my idea and my thesis because not a lot of institution ownership. So that's the reason I was more short biased, thinking that the stock should follow GME and AMC when they broke down to lows. I actually got quite chopped up. Like if you look at my execution chart, I had decent entries in the early on. I avoided the hold on the way up. I shorted 620s, $6, covered some into the 560s. But ultimately, I want to see the stock stay below that $6 key level here and unwind into the close. I wanted to like fill some of the gap towards that $5, just like the AMC chart you saw. Specifically, I was looking to trade the first red day short and the extended daily short on this stock, just along with AMC. But as you can see, the stock actually held for quite a while. And I think there's a couple of reasons why. So I think the reason it was able to hold so strong and still not break out, and as you can see, it squeezed a couple of times, once, twice, 3 times here, and that's where I kind of exited for a loss. I think it was able to do that because the stock was pretty easy to borrow. Like it was free on a lot of platforms. Whereas GME and AMC, they weren't free. You have to pay a little bit for them. But on cost, it was free. So I think that's definitely number one. And number two is the float is pretty low, right? So if everyone's trying to short those stocks, a lot of times that's where you get those like squeezes, short squeezes, which I got caught on.